My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. This is probably our 17th webinar we've done, and this one has set another record. Last month we set a record. This month we set a record for people registered, and it looks like we're going to do the same for attendees. So we really do appreciate you taking the time out of your busy day to learn more about non-QM, and hopefully today you'll walk away with a lot more knowledge about the non-QM programs we have, and about some great tools we have and some great ways we can help you grow your business. So, but before we get started, I want to introduce my two subject matter experts. I'm really close with both of them because we're bringing a Texas flavor here to you today. So, Christy, please introduce yourself.
Yes, I'm Christy Best, account executive here in San Antonio, Texas. And again, I just kind of want to echo what John said. We really, really appreciate y'all taking the time to listen to us and learn about our products, and hopefully we can bring some value to you today.
Thanks, Christy's only been with us for a year, but she is bringing so much to the table to Angel. We're lucky to have her. She's really got an expertise in marketing. So if your customers are on here today, Christy, they really need to reach out to you and how you can help them grow their business. Armando, please introduce yourself.
Hello, thank you, John. Yeah, my name is Armando. I'm an account executive in the Dallas-Fort Worth area. I've been with Angel Oak 3.5 years, and again, yeah, thank you guys for taking the time to allow us to talk to you about non-QM.
Yeah, Armando is a top producer in Texas and qualified for our sales incentive trip this year. So congratulations, Armando. It's a pleasure working with you. So thank you. So guys, this isn't about Angel Oak, about our vertical integration. It's not about our 30 securitizations for almost $11 billion. It's not about well, it is a little bit about the 40 enhancements we've had over the last 18 months. And Armando and Christy are really going to teach you about those enhancements and again, how to grow your business. So before we get started here, Armando, we're going to roll into bank statements. But before we do that, we want to do a little poll here, and we've done this on every one of our webinars, and it really should excite everyone on how much opportunity there is. So we launched a poll. How many of you have originated a bank statement loan in the last 12 months? We'll give it another few seconds. All right. Great. So this is getting better. So hopefully what this means is over those last, 17 to 18 months, people are really starting to get a little bit more comfortable with bank statements. So without any further ado, Armando, give us some of the highlights of our bank statement program.
Thank you, John. In regards to our bank statement program, that's our bread and butter. This is what we do. We've not only done it the longest, we have our process down packed. We have a group that's all they do is analyze bank statements for us. So as a loan officer, you don't have to worry about trying to determine what the income is. All you have to do is gather them for us, and we'll do all that hard work for you. So bank statement program, minimum score is 600. With a 600 score, I can actually get you 70% LTV, 640 gets you 80, 660 gets you 85, and 700 gets you 90. And one of the things that I know that you're going to touch on, John, is the fact that we're vertically integrated. And our bank statement program is a perfect example of the benefit that Angel Oak brings to the table with that advantage is that if I have a borrower that's got like a 690 score or 693 score, oftentimes that's something that we can get an exception on because we are vertically integrated. So loans up to $3 million, minimum loan amount is $150. We do have a 12 or 24 month business and personal bank statement option. We also have a 1099 option that mirrors rate-wise the 12 and 24 months bank statements. We do have 2-year seasoning on foreclosure, short sale, and bankruptcies. All of our programs are 30-year fixed. We do require that the borrower is self-employed for 2 years. With our business bank statement program, the borrower has to have a 50% ownership in the business. And with our personal bank statement program, they can go down to 25. Purchase, refi, and cash out. In Texas, I do a lot of cash outs using bank statements. And, Christy will touch on this in the marketing piece we have marketing that's directed towards CPAs and, doing cash outs for for self-employed borrowers. That's definitely a niche, because you ask a CPA how many of their clients can't tap into the income and into the equity in their property because they write off so much on their tax returns. And for the most part, they're all going to tell you yes. So love doing cash outs in Texas. Owner occupied, second home, and non-owner occupied. We do have a 40-year interest only option available. We can also do non-warrantable condos with all of our products. There's no LTV or rate adjustment for that. And then the loan amounts over 1.5, we are going to require a second appraisal. So.
Yeah, and Armando touched on a couple of things. Thank you, Armando, for covering those highlights. A couple of things. One, yes, this is being recorded. We will get this out to you before end of day tomorrow. If we don't answer all your questions, we want this to be interactive. You have two subject matter experts on here, so fire questions away. We'll get them answered. If we don't get them answered, today, we will have if your account executive is not Armando or Christy, we will get your local account executive to reach out to you before end of day tomorrow also. So questions are coming in. Okay, the one question here from Ellen, do we accept foreign bank statements? Ellen, unfortunately, we do not. So I know, Armando, you went through the LTVs and the scores required. Christy, what's our DTI on bank statements?
So it's going to be 40/50 on the bank statements.
Great. And then Armando, some of the other questions coming in, you talked about an expense factor of 50%. Talk about some of the other expense factors that we will either go down to, or in some cases, have to use a higher one.
Yeah, definitely. So our expense factors are reflective of the type of industry that your borrower is in. Those industries that have higher overhead employees or a brick and mortar location, we actually will hit them with a higher expense ratio at 70%, meaning that we'll give them credit for 30% of the deposits. But those industries, on the flip side of that, those industries where you work from home, your work from home realtor that doesn't have any employees and that doesn't have any overhead, we can give them credit for up to 85% of the deposits with those. So it's deal specific depending on the type of business that the borrower owns, but we can do 15% expense ratio. And if on our personal bank statement program, if they have a business account, we can allow them to, we'll actually give them credit for 100% of the income generating deposits in the personal, since they do have a business account. So definitely lots of flexibility there. And it really depends on the scenario, the specific scenario and what the borrower does for a living.
Yeah, we got a lot of questions coming in. Keep them coming. We will get them answered. If not today, definitely by tomorrow. Alyssa, or Elisa, if that's your name, we do, one of the, Elisa's asking about, the tool, our quick quote tool. We're going to go examples of that as we get closer to the end. Thank you, though, for asking about that. Christy, the self-employed borrowers are really, really interested in cash flow. Talk a little bit about how our interest only works.
Yeah, so I think interest only is gonna make a comeback this year as a more popular product for sure. So with interest only, it's going to be a 40-year interest only. So for the first, it's going to be a 40-year loan. For the first 10 years, it's going to be interest only, and then it's going to roll over into a fully amortized 30-year fixed. Yeah. One important thing I think to remember on that is that the borrower does need to qualify on that fully amortized payment, not that interest only payment.
Great, great. Couple of questions, Armando, about cash out, and you might have to look at, because we're just used to Texas. Obviously, you mentioned 80% cash out in Texas. What's the max cash out we will go to outside of the state of Texas? So
we can go up to 85 on a cash out outside of Texas. So
look at Armando knowing that. That's impressive. Thank you, Armando. A lot of other great questions coming in. What about, Christy, what about second homes and non-owner occupieds on our bank statement program?
So yeah, actually, we're starting to see even more of those on there, because you can actually go to 85% on second homes and non-owners on the bank statement program, as long as your borrower has a 660 score.
Yeah, you're all going to hear us talk throughout the rest of this hour of, second homes and investment properties. We all know what happened about a year ago, where FHFA put those loan level pricing adjustments on second homes and investment properties, and in fact, they limited your portfolio to be actually only 7% of your portfolio could be second homes and investment properties. We truly, the loan level pricing adjustments are coming back on April 1, and we truly believe that somewhere in 2022, they're going to bring those caps back for your portfolio. So if you're not doing business with a non-QM lender today, definitely do your due diligence and sign up with one real soon, because starting April 1st, I think your second homes and your investment properties are going to, you're going to have to find alternative sources. Armando, question here, can we waive escrows on bank statement programs?
Yes, you can. You have to have a 700 score, and 80% is the max LTV, and they do have to pass HPML. Can't be a high price mortgage loan on that. But yeah, we can. There is a rate adjustment on that, a quarter point, and yeah, we can do it.
Right. So these questions are coming in, they're moving so quick, I'm trying to keep up. So Armando, maybe go into a little bit more about the difference between the 12 and the 24. What would be some of the examples you would use 12 versus 24? And I know my camera, hopefully my audio hasn't frozen up, but I know my camera is frozen up here. So, but give us an example of the reason why you would use 12 or 24.
Well, I always advise my loan officers, let's look at 24 first, and let's see where the income comes in at 24, because you are going to have anywhere from an 8 to 3/8 better rate using 24 months of bank statements. But, a couple of examples of where we would need to transition to 12 is NSFs, or declining income. We can do 6 NSFs per year. And, there's sometimes where in months 13 through 24, there's significantly amount of more NSFs than in the most recent 12. And in that scenario, we would shift to 12 months. And then there's a declining income component as well. So if the income's declined, from the previous year, then 12 months is going to be the best way to go on that.
Yeah, and conversely, Armando, if they had a really good year in the last 12 months, right, we might use the
there might be more income. Yeah. So given COVID and everything that's happened, there's I see that a lot. Thanks for bringing that up, John. That the last 12 months, the income has grown significantly, and it just makes more sense DTI wise to go 12 months versus 24.
And Christy, a couple questions here about MI on our LTVs. Is there any MI on a 90% LTV?
No, we don't have MI on any of our products. So that's a great question.
Yeah, so when you're looking at a 90%, only 10% down, 90% LTV in the rate, and we're going to show you some rate examples here in a little while, but when you're comparing it to a conventional rate, start to think about the MI factor if you're over an 80% LTV. One of the things I really wanted to share here is in 2020, new business applications increased 24% over 2019. That's 24% new business applications. So guess what? Those borrowers who signed up for new business applications in January 2020, in February 2020, and even in March 2020 are now eligible for our bank statement program. Now, the statistics aren't in for 2021 yet, but I can promise you they're probably not going down. So this segment of society, whether it's the Great Resignation and people just resigning and starting their own business, this segment of the workforce is only going to continue to grow. So couple of other questions. Armando, talk a little bit about reserves required.
So yeah, we do require 6 months reserves, and on a cash out, actually we can use a cash out to satisfy that requirement. And that's an area that we do have some flexibility. If the borrower qualifies for 90 but is only doing 85% LTV and they're a month or two short on reserves, we often, that's an exception that I've gotten in the past. So we do require 6 months reserves, but we do have flexibility on that requirement.
Yeah, and I think one thing Armando just mentioned there, and I want to touch on this, and this is the reason why you work with your account executive, because 30% of the loans we close at Angelo don't meet our guidelines. So if you're pre-qualing that, you get with your account executive. They are experts. We've got almost 90 of them across the country, and they've been here a good amount of time, and we provide extensive training for them. Christy, talk a little bit about the prequel process. I think Tanya wanted to know a little bit about the prequel process. I know Armando talked about the bank statement review team, but talk a little bit about what that process looks like.
Yes. Okay. So the great thing about the pre-qual process here at Angel Oak is that really it's our job as an account executive to pre-underwrite that file. So it's really a discovery phase. You know, that's one of the reasons we're getting that income up front. That's really important because that income is going to follow. And I know we touched on this, but I kind of want to clear that, make that even more clear. That income is going to follow that loan through the underwriting process. So getting that pre-qual up front and knowing exactly what your borrower qualifies for before they begin shopping, you know, is an incredible tool. And also along those lines, the great thing about the bank statement, the cash flow going into their bank account rather than their tax returns, is you're really increasing their buying power. I wanted to remember to mention that. But as far as the pre-qual stage goes, you're going to use our quick quote tool, which is really user-friendly, simple to use. We'll walk you through it on the first couple of times. And then we are going to take a look at that 1003, that credit report, and do a good scrub and a pre-underwrite on it. And then we're going to have that bank statement review department create that income worksheet for you so you know exactly what that income is from the start. So I always encourage my loan officers, get that income calculated as soon as your borrowers even begin thinking about, you know, making a purchase.
Yeah, Christy, and I don't know if my camera's still frozen, but anyway.
You're still frozen.
It's still frozen. You get to see the top of my head. That's awesome. But Christy, you brought up a great point. Yeah, we did a couple trade shows earlier this week in Florida, and one of the things we really wanted to start coaching borrowers on is, you know, you're going to try to take this borrower conventional, right? Everyone does. Then you get the tax returns. While you're getting those tax returns up front, ask them about their bank statements. Get those the same time. Go down those parallel paths, as Christy's saying, you know, go down those parallel paths. Work with Angel Oak. If they qualify conventional, great. But guess what you're going to do? You're going to get that income, as Christy just mentioned. I love that she mentioned it. You're going to get the bank statements back the same time. You're probably going to get that income back, the tax returns. And guess what? You're going to show a purchasing power probably 3-4 times. Now what are you going to do? You're going to go back to that realtor or that referral source and say, hey, instead of shopping for that $300,000 home, why don't you go shopping for that $750,000 home? And I promise you that referral partner will be in love with you. So thank you, Christy, for bringing that up. What's the matter of time, Bar? I think you touched on this earlier, Armando. Leo wants to know how long do they have to be self-employed?
We do require 2-year self-employment. So they have to, you know, whether they own a corporation or an LLC or whether they're a 1099 truck driver or nail tech, we have to have a 2-year history of them being self-employed or 1099.
Yeah, and Armando, you touched on 1099s. Go into just a little bit more information about 1099. Obviously, a 1-year, 2-year, maybe expense factor that we're going to use there also, please.
Yeah, definitely. You know, oftentimes 1099 is a simpler option for the self-employed borrower, because what we'll do is we'll gather 1 or 2 years 1099s plus a year-to-date of bank statements or a year-to-date pay history. And, you know, that way you don't have to gather 24 months worth of bank statements. I have had several loans that we've actually been able to switch to 1099 when we started looking at bank statements initially because of NSFs and declining income. And, you know, just 1099, not declining income, but NSFs, the 1099 was, you know, we were able to save the loan using that product. So, and then your 1099 borrowers usually have a lower expense ratio because they don't have overhead or employees, they're an employee themselves. So oftentimes we can get allow them to use 85% of that income because they don't have any overhead, they do work from home, and they don't have any employees. So 1099 option is great.
Yeah, thank you, Armando. Samantha, hopefully that answered your question. Christy, talk a little bit about appraisals. I know not everyone's thrilled with appraisals these days. Just talk about appraisals and when do we, you know, we just talk about how we need them, and then when do we require a second one?
Okay, yeah, great question. So the appraisal, the first thing is that I know that we probably have some loan officers on here who have not brokered a loan before. So one important thing to remember, of course, is that we have to disclose before you order that appraisal. We do get asked from time to time if we accept transferred appraisals, and that is something that we can't accept as long as they were ordered through an AMC. But what will happen with us, and what your account executive will do, is once you register a loan and you have those disclosures executed, we will walk you through how to order the appraisal. We have a list of our AMCs, that we will use, the AMCs that we use and are approved with us, and we'll kind of walk you through that process. Of course, thing with appraisals these days is turn time, and I know that's and that's going to be true, really no matter where you're going. But we are going to require a second appraisal for loan amounts over $1.5 million.
Yeah, thank you, Christy, and Drew, thank you. I know you've used this before. Andre's your account executive, so we appreciate it. Anything else before we're 25 minutes after the hour? I want to make sure we kind of keep moving on. Anything else either one of you want to add regarding bank statements?
Well, I did want to make a comment about your self-employed borrowers. It's been my experience that there's usually more money in the bank statements than there is in the tax returns. So I just wanted to piggyback on what you were saying. Definitely, when you have a self-employed borrower, get those bank statements, because there's going to be more money in there. And who doesn't want to give your borrower an option for a larger home? So I just wanted to throw that in there.
Yeah, decided to use a different camera here, so I'm back. Yeah.
There you go, you're back.
There you go.
Good or bad. So
you're back.
Sorry about that. And then, so Christy, let's go into our second most popular program, and let's talk about our ICF, investor cash flow, or as other people refer to it as debt service coverage. But before we do, Christy, I do want to see if we can get another poll up here. Who has closed a debt service coverage program in the last 12 months? We'll take about 10 seconds here just to see the results. Okay, this one hasn't improved that much over the last 12 months. Okay, so we're seeing 75% have not. So huge opportunity for everyone, right? Huge opportunity to help let us help you grow your business. 36% of the homes owned today are investment properties. So we're going to teach you guys or inform you guys on our debt service coverage program. Christy, give us the highlights, please.
Yes. Okay. So honestly, this is one of my favorite programs that we have. I love this program. My originators love this program. One of the reasons they love it is because these almost always seem to come in a package. You're doing 2, 3, 4, 5 loans for the same borrower at the same time. So originators love that. So in the bigger picture, a debt service coverage ratio means that we always have to satisfy the ability to repay, right? Even in non-QM, we always have to satisfy that ability to repay. And how we do that with a DSCR loan is that the rent analysis, the appraiser is going to give us that market rent analysis, that covers the mortgage payment. So to keep that simple, your mortgage payment is $2,000 a month and your rent analysis is $1,000 a month. We are going to use that to show that ability to repay. And what that means is there is no income and there is no employment on the 1003. And I'm going to repeat that because I had one of my loan officers, the first time he did one, he's like, my processor came to me 3 times and said, there's no income and employment on this 1003. I need to put the income and employment on this 1003. So we don't need that on a DSCR loan because we are using that market analysis. And if your borrower actually has a 700 score, we can go as low as 0.85.
You froze there a little.
I'm frozen?
Armando, can you hear me?
Yeah, I can hear you. I can hear you, both of you.
Okay, perfect. Just want to make sure. So, if, like I was saying, and nobody has a $100 mortgage payment, but to make this simple, if you had a $100 mortgage payment, and it could go as low as $85 on rent analysis.
Christy, you're back now. You broke up a little bit there.
Okay. Can everyone hear me okay? Armando, can you hear me?
Yeah, I heard everything you said, John.
It's John.
It's me again.
Your
John.
camera's freezing up.
Okay. So, here, a couple of highlights on this program. It does go up to $1.5 million. It does go as low as a $75,000 loan amount. We are going to use that market analysis to show that ability to repay. You can do cash out on this. You can go to 75% on a cash out. As with our other programs, the cash out can count towards the reserves. Something that makes this attractive to originators, that are looking for options outside of conventional is we're only going to look for reserves on the subject property. In the conventional world, you're going to be looking for reserves on all of the properties. So that is something that's attractive. We don't have a limit on the number of properties that borrower can own. You are going to put all of those properties on the schedule, but we're not going to be asking for lease agreements. We're not going to be looking at, rent payments on those. We're really underwriting this file based on the borrower's, credit history and that subject property. Something else that makes this really attractive to investors is the ability to close in an LLC. So this loan can close in an LLC, which for your very savvy borrowers, your investors, it's often very important to them. And again, the great thing for you as an originator with this is that these loans often come in packages. They're taking cash out of one property, they're purchasing another property with that cash out. One thing I think, Angel constantly trying to just improve our processes and make things simpler and simpler for our originators. And if you send in a package, I had 5 for one borrower, last month, those are all going to go to the same underwriter. So you're going to get the same conditions on every file, and that's going to make your job easier and allow you to go out, and field more loans. So this is definitely one of my favorite loan programs. It's simple, it's attractive. And we, again, are meeting that kind of disconnect on things that are falling outside of that conventional box. And as that conventional box shrinks, especially in second homes and non-owners, we're picking up more and more of those loans. And this is a program you want to familiarize yourself with, bank statements as well, but you really want to familiarize yourself with this as investors. This is a hot market for investors. And the simpler you can make the process for them, the better.
Yeah, instead of coming in and qualifying them with lease agreements on all their other properties or tax returns for all their other properties, no income, just how this property, subject property cash flows. Armando, talk about the no debt service coverage and the requirements for that, because we're seeing a lot more people play in that space.
Yeah, so we do have a feature if the rent comps don't come in to use the no DSCR option, and it's you have to have a 700 FICO, max LTV is 75%, and if you can restructure the loan to, as long as they do have that FICO, go down to 75%, we won't even look at a DSCR on it, which that's really, really attractive. That's really one of the big selling points for this program is that, we're not going to look at income or employment. We're going to look at DSCR, but you know what? If the rent comps don't come out, we can still do it at 75% LTV. So definitely one of the biggest features of that program.
Yeah. And Christy, talk about is principal, interest, taxes, and insurance included in the DSCR calculation?
Yes.
Okay, great. Danielle, hopefully that answered your question.
Yes, and one thing I forgot to mention, John, of course, is that we now allow, VRBOs in short term. Everybody who's on here in Florida was like all the way around on that.
Yeah.
But I do have some questions on that since we rolled that out, and this is a common question: is how do you calculate the short term? We don't. We use the rent analysis, the regular rent analysis, and that has to cover it. So you're not having to show how they're renting that out, on a daily, weekly, or nightly basis. So.
And Christy, I think you answered about 6 questions with that comment.
I knew it was coming.
So, Armando, talk about having to have a primary. We got some people asking if they're renting, so just talk about that so we can clarify this for another 7 questions here. So.
Yeah. So definitely, so one of the basic tenets of this program is that you do have to have a primary. You can't be a first-time home buyer. Although, going back to the whole vertical integration and where we have flexibility, I've gotten exceptions to where the borrower didn't own a primary, was renting, but had other investment properties. So we do have some flexibility on there, and again, it's not something that's that we can get around all the time. But if they do have other properties, that's an exception that I've gotten before. But yeah, they do have to have a primary. The primary has to be worth more and have more square footage than the subject property. And then sometimes we can get around that as well, depending on the scenario. I mean, I had a deal where the borrower was buying a condo in Florida and lived in the Frisco area, and obviously the properties, the primary was worth less than the investment property, and we were able to get around that because it makes sense. So
yeah, thank you, Armando. Christy, talk about prepayment penalty, please.
Yeah, so we do have a standard prepayment penalty on our non-owner occupieds only, and that's going to be a standard 3-year prepayment penalty. If you have a borrower that knows they're going to be in that loan for a while, there is a rate break if they want to do a 4-year, and you do have the option to buy down that prepayment penalty as well. You can buy it down to a 2-year and a 1-year, and there is that opportunity, of course, to buy out the prepayment penalty completely.
Yep. Yeah, thank you, Christy. And Alejandro, we're going to talk about the next product is we're going to talk about, because we're about 25 minutes to the top of the hour. We will, just so everyone knows, this is being recorded. You'll get to see the top of my head if you haven't seen it already.
For 20 minutes.
This is going to be recorded. We will get this out to everyone before end of day tomorrow. If we don't answer your question, we have a lot of great questions. I'm sorry we may not get to all of them, but we will get your account executive to answer your questions no later than morning tomorrow. Christy, let's talk about the other program that falls underneath our debt service coverage program, and that's our foreign national.
Yes.
Okay. Some highlights here.
Yes. Okay. So the foreign national, I know Armando's going to talk about I-10 and foreign national. Sometimes those get confused. They are completely different. The first thing with the foreign national is this borrower does not live in the United States. So they live in a foreign country. They do have a visa. We have the visas kind of listed there, but you can always send us a copy of the visa if you want to confirm that it is acceptable. But this is a borrower who lives in another country and wants to purchase a rental property in the United States. So the max LTV on these is going to be 70%. Again, not a lot on the 1003 for these, right? They don't, and there's no credit report. They don't have a credit score. There is no income. There is no employment on the 1003. And this is going to fall under, as far as that ability to repay goes, it's going to fall under that Dscr. So it's going to be a 1-to-1 ratio. A few things, to remember, and your account executive will always remind you of, the details here, but they do have to have 12 months of reserves, and those reserves do have to be in a U.S. bank account. We're going to need to source and season all reserves for 60 days, and they do have to be in a U.S. account for 30 days. And, your account executive will remind you of this, but important to highlight, if you have a buyer who is looking to start shopping, have them put those reserves in a U.S. account immediately so you don't have a seasoning issue at the end of those 30 days. So it does need to be seasoned. And there is not as much flexibility on the Dscr on the ratio here. It does have to at least be 1-to-1. And again, it goes up to loan amounts of $1.5 million. We're getting a lot more of these, lately. And I'm in San Antonio, so we get a lot of them, just based on, geographically where we're located. We're seeing a lot of them from Canada. Canadians do not have to actually have a visa, just a valid passport. This is a great program to familiarize yourself with. And again, there's not a ton of paperwork involved here.
Yeah, Chrissy, I think we're seeing a lot more come in because, of the uncertainty right now and the instability, overseas. We're seeing a lot of people. We also see a lot of people who want to send their child to a university, and instead of, just renting over here, they want to purchase around, a lot of these larger universities. So think about that as you look at the foreign nationals. Armando, again, like the investor cash flow debt service coverage, talk about the prepayment penalties.
Yeah, we have the same standard 3-year prepayment penalties that go with the ICF program, investor cash flow. And again, those can be bought down. So we have the same options.
Yeah, and a couple other questions I had here. 1.5 million is the max loan amount. Well, we re-rolled this program out about 3 months ago, maybe 60 days. So right now, exceptions on our on our foreign national are probably going to be fewer and far between. So, and the max LTV is 70%. I know we're almost 20 minutes to the top of the hour. Armando, I'm going to have you take us through our full doc programs. We're not just alternative income. We're not just investor cash flow. We do have some full doc programs. Armando, talk about our first of our, and we call these our waterfall of programs for the full doc. So Armando, hit us on the first one here, our platinum.
Yeah, thanks, John. So the first program I want to talk to you guys about is Platinum Jumbo, and this is a program that's a perfect fit for those just missed borrowers on the prime jumbo side. We can go up to 95% with no MI, 720 score needed for that. We can go down to a 660 score. Loans up to $3 million. Our minimum loan amount is $250 on that. We do have a 4-year seasoning requirement on foreclosures and short sales and bankruptcies. We can do this owner-occupied, second home, and non-owner occupied. Purchase, cash out, and rate term. Again, cash outs. I love doing cash outs in Texas, so I use this a lot to do jumbo cash outs. We do have this is a full doc program, and we do have the interest-only component available, along with a 1-year tax return program for your self-employed borrowers. Again, we can do this on non-warrantable condos without a rate or LTV adjustment. And just like our other programs, loans over 1.5, we are going to require a second appraisal.
Yeah, and really think about this program. This is the one that doesn't qualify for that true prime jumbo that really requires, I think, 7 years. 7 years from a bankruptcy or foreclosure. We'll go down to 4 years here. The 1-year tax return is key. We're only going to require that the borrower have been self-employed for 2 years. I believe conventional requires a 4 or 5 year requirement for self-employed. I got that from one of the AEs here in Florida yesterday, and it was a great reminder. So, and again, that's 95%. Christy mentioned it on our bank statements, 90% no MI. This is a 95% one loan, no MI, 30-year fixed. So, Armando, take us through, and one other thing I do also want to remember, we'll go up to, Armando, second homes and investment properties, full doc, right? We'll go up to an 85% LTV here also?
That is correct.
Yeah.
Yeah, and John, on this too, the loan amount, $2 million on one loan, no MI, that is another reason that we see and everyone is needing larger and larger loan amounts.
Yeah, thank you, Christy. That's a huge point right there. So Armando, let's go to the second of our full doc programs. Let's talk about Portfolio Select.
Yeah, definitely. Portfolio Select is one of our, I'm starting to see a lot more of this, especially with the Texas home equity component going full doc, but this is for your borrower that's just recently recovered from a credit event. So minimum score is 600. I can go up to 90% with a 700 score. And again, that's 90% one loan, no MI. Loan amounts up to 2.5 with a minimum of 125 on the loan amounts. And here's one of the really attractive features of this program is 1 year seasoning for foreclosure, short sale, or deed in lieu. 2 years on a bankruptcy. On a BK13, we'll go off the filing date for that 2 years. And that's another feature that stands out. Purchase, and again, cash outs, rate term refis, owner occupied second home investment properties, 40-50 front and back end ratio. We can do gift funds on this. We have the 40-year interest only feature available. And again, we can do non-warrantable condos without LTV or rate adjustments. And loan amounts over 1.5, we are going to need that second appraisal.
Armando, you just mentioned something. I lost my train of thought about. Anyway, I know we mentioned cash out, and just think about this. If you have a borrower that has a 1 times 30 on a jumbo loan, we'll allow them to do a cash out.
Yep.
That's pretty big.
That's strong.
Yeah.
It is.
This also has that 1 year tax return available. Christy, anything else with regards to portfolio select and full doc?
Yeah, one thing I think that, you know, again, originators, you are looking for repeat business. And I think one thing with this is this often is a loan that you're going to put your borrower in for 1 to 2 years, allow them to recover from their credit issue, you know, and then improve their credit. And then you may be putting them into a conventional loan. So that's something that I like to mention on this program. And I know, Armando, there are some people in here that are not from Texas, and they're like, why do they keep talking about these Texas cash outs? Because we're complicated.
Texas home equity, baby, I love them.
Here. But you know, it is something to keep in mind. I think that I'm curious to see how low inventory is going to actually increase some of those cash out refis. If borrowers are not able to find the properties that they want, there's a ton of equity, you know, not just in Texas, but definitely especially in Texas. And borrowers are going to be taking money out and taking that home and turning it in to the home that they can't find, you know, because inventory is so low. So I don't think those cash outs are going to go away.
Christy, I'm not even going to say anything else. That is really, really well said. Thank you. That's awesome. So Armando, let's talk about, Christy mentioned it earlier while she was talking about foreign national. Why don't you cover the I-10 program here?
Yeah, definitely. The I-10 program is housed inside our Portfolio Select program. So we can do up to 75% on a purchase and a 70% on a cash out. And, you know, the thing to remember with this program is that you have to make sure that the income docs that the borrower is using the I-10 number with the income docs. We do have trade line requirements. And, you know, when we first rolled this program out, I was kind of skeptical about, you know, having trade lines with an I-10 number. I have a couple of these in my pipeline now, and to my surprise, they have great credit. Not only do they have great credit scores, they have great trade lines. So don't let that hold you up. Loan amount's up to 2.5. Minimum loan amount is 125. 1 year seasoning on the foreclosure, short sale deed in lieu, 2 years on the bankruptcy. And again, this mirrors our Portfolio Select program. But you know, the one thing that I will advise is to make sure up front that they are using the I-10 number on their income docs.
Yeah, and just so everyone knows, those are full doc programs. I-10, our Portfolio Select, our Platinum, our full doc. If they're self-employed, we are going to require tax returns. Obviously, if they're W-2, just the W-2. But these are just really, really great programs. You know, and Christy mentioned it before, the 2-for-1 deal. You know, I'm just going to emphasize that a little bit more. You know, we call these 2-for-1 because, as Christy said, get that person in that home today. Get them in there today so they can start building that wealth and that equity in that home. And then 2, 3, 4 years later, you know, they can either sell and now purchase using a conventional or a prime jumbo. So I really, you know, thank you for mentioning that, Christy. It's as long as you're staying in touch with that borrower, there's no reason you can't get 2 loans out of 1. So thank you for mentioning that, Christy.
Exactly.
And then, Christy, let's talk about the last of our programs. We are going to talk about the great tools that we have, like our quick quote, and then we're going to talk about, there's been a lot of question about marketing. So let's talk about our asset qualifier, Christy. You've been, I won't say lucky enough, but you've been.
I know. I seem to
enough to run a few of these through already.
I know. This really is a great loan program. And I do want to mention just really quickly, as we're talking about a lot of these, the I-10s, the foreign nationals, the bank statements, the ICFs, a lot of originators, if you haven't brokered, you're not familiar with these products, don't let that intimidate you, you know, into going into these new spaces, because you will have an account executive that will help to educate you and help to kind of walk you through it. So, you know, don't be afraid to go into new spaces and look for new loan opportunities, because do know that your Angel Oak account executive is going to be there to educate you and support you. So I kind of want to throw that out there. Asset qualifier, it's similar to a bank statement. We love it because they're big loan amounts. This is for your borrower who has significant assets but cannot show regular income even through bank statements. You know, often they're investors, maybe they buy and sell businesses, but they have the cash. They have the cash to likely, you know, pay cash for their home, but they would like to hold on to some of that cash. And really what we're looking for here, it's a 700 minimum score, 75% LTV is the max. Loan amounts do go up to $3 million. And you're looking for borrowers to have assets to cover 60 months of all of their debts and have at least $500,000 in post-closing. So this really is a great program and something to just keep in the back of your mind, because like John said, I've had quite a few of these. So these, these borrowers are out there. And,
yeah, I don't know if it's true. Oh, I'm sorry, Christy, I apologize.
Oh, no worries. So just one thing is, this isn't going to be for your borrower who just sold their house in another state for $3 million and, wants to use this. They do have to show that they've had those assets for at least 6 months. And we can use a combination of, 401ks, IRAs, there are some percentage deductions there, checking accounts, et cetera, to show that. Not crypto or coin currency, but, there is a lot of opportunity there to put together different assets.
Yeah, Christy, we got that question yesterday at a trade show about crypto. Yeah,
we get that a lot. Yeah, I don't understand. I don't even pretend to understand it.
Yeah. Hey, Armando, one of the things we haven't covered that's available on all of our programs. We talk about purchase. We talk about refinance. We talk about cash out. Talk about delayed financing, Armando.
Yeah, definitely. We can do a delayed financing, and this comes a lot, especially with what's going on in the housing market. To where you're not going to be able to get an extension. There's a backup offer ready to go. So I've been able to save several deals with delayed financing. And basically, the way it works is within 6 months, if they've paid cash, we can do a cash out and help them recoup a lot of what they put in to purchase the property. We do. 85 max, depending on the program. In Texas, it's 80%. And we can do it with all of our programs. Bank statement, we can do it owner occupied, non-owner occupied. And definitely it's a great option to where, you get yourself, if you're in a situation to where the seller's not going to extend, then we can definitely use that as a tool to save the loan. So, like I said, it's helped me out several times. So saved us. It's a great program.
Mm-hmm.
Danny, I like where your head's at. How many files does he have to close before he gets free bourbon? I don't know, but not to take away what Armando said here is that delayed financing is playing a bigger and bigger role in today's market. And it's really, really important for everyone to understand that. How many deals do you lose because the borrower paid cash, right? Because they had to close, they had multiple offers. It's happening everywhere in this country. There's a way for you to still get paid on that deal, right? Do the delayed financing. It's an extremely, and not only that is you're getting your borrower back that money that they're out of pocket. Maybe they want to use it to invest in back into the stock market. Well, the market's, maybe not doing that well right now. So really do think about those things as you're working with your Angel Oak account executive. So, hey, I know we've had a lot of people asking. We've got 10 minutes left here. A lot of questions, a lot of great questions. We really, really appreciate everyone on this call and taking the time out of your day to hopefully grow your business. Well, one of the things we really wanted to show you, and a lot of you have asked for this, and we're going to get here right now, is that quick quote tool. How do I get there? Well, you do need login. You do not. Let me go back up here. Myself. Go back to our simple and easy website. You would click on here, our non-QM quick quote. And it's really easy to use. I know a lot of people have asked about this, and Armando, I'm going to let you take me through a scenario here.
Yeah, okay, so let's look at a typical bank statement scenario. Let's do a loan amount of $650. Medium credit score, let's say about 740 to 759.
I got to move some things around here because I'm using a different camera. Sorry, people. I'm gonna actually stop sharing my webcam here for a minute because I've got to get in from behind the counter. Sorry, guys. All right, go ahead, Armando. Give me that credit score again.
All right. So credit score 740 to 759. LTV 80%. 0 times 30, that refers to mortgage or rental lates. 1 unit purchase. Where it says full doc, go down to 24 months business bank statements. Owner occupied, U.S. citizen. We have the escrow waiver option, interest only waiver option there. As you can see, par rate there is 4.875. You know, and one new feature that we've just recently added, go ahead.
Go ahead, Armando, go ahead.
Yeah, one of the features that we just recently added is the rate option right there. If you'll click on that, it'll give you all of the rate options in regards to borrower lender paid. So obviously par rate is right there at 100 at 4.875, and you can see how it goes down progressively, and the rate goes up as the pricing goes up. So you have the option to have that conversation up front with your borrower in regards to what rates might look like. And again, you don't need to have logins to do this. It's on our website, and it's definitely something that you should have on your favorites, marked on your favorites. Yeah,
Armando and Christy work really hard, but this is available 24/7, right? So, we've got, so Armando, let's go through it. Bank statements are our most popular program. Let's go through another scenario here with regards to our debt service coverage program.
All right, perfect. So with the Dscr loans, those are usually lower loan amounts. So let's do a loan amount of 200. And, these borrowers have great credit. So let's, we can do 760 score. I'm seeing a lot of that. 80% LTV on a 1-unit purchase. And where it says income documentation, go to Dscr on that. And then the occupancy is going to be investment. Yeah, there you go. So as you can see in this scenario, the rate is at 6 1/8. And one of the things that you have to keep in mind whenever you're looking at these rates is that we're not looking at income or employment on this at all. Let's say that your borrower is wanting to close in an LLC, or let's say that they have 20 properties and can't go conventional. That's powerful. We're not looking at income or employment at all. And again, you can hit the view rates and see what the different rate options are in regards to borrower or lender paid. And, we give you the flexibility to have these different strategies in regards to pricing to where, you're giving your borrower options.
Yeah, I think,
if you don't mind, just jumping in for a second on that, because I think sometimes there are loan officers, right? They just saw 6 1/8 and they're like, oh, we've been in this very low rate market for a long time. But I think that it's important to remember that these are not borrowers who step over dollars, to pick up pennies. They are looking at cash flow. They are looking at cash flow, and they're looking at benefit. They are building wealth through real estate. When you tell them the rate is 6 1/8, but their rent is going to cover their mortgage payment, they don't care. They are looking to build wealth, and they're not going to be as rate sensitive, as some people would expect. We're really in a benefit selling market. We're not in a rate selling market as much anymore, in my opinion.
I agree with you 100%, Chrissy. Thank you.
Yeah, Christy, very well said. So Armando, great. This is also, we're kind of coming up 5 minutes before the top of the hour. I know a lot of people have asked about, marketing, and some people have asked about prequels, and, we'll get your local account executive to reach out on how you can get them a prequel. But to get to our marketing portal, and let me tell you, I believe unequivocally we've got the best marketing team in the country, not just in non-QM lending, but in all of lending. They do a great job. They make this really easy for you. So if all you can see, Christy, take me through, you're a master marketer. So take us through some of the benefits and how everyone on this call can market themselves a little differently.
Yeah, so as John mentioned, truly, if we can, pat ourselves on the back for a minute, we truly do have the best marketing department in the space. And, one thing that I think that I love about, just Angel Oak as a company and about our marketing department is we are choosing to invest in our relationships with our brokers. We're providing you with tools that allow you to build your business. And these are not, you will see, as John kind of goes through some of these can be co-branded, but that's not how they're set up. John has his corny jokes that, we're in the witness protection program and nothing says Angel Oak on it, but it's true. We're giving you marketing tools that allow you to build your business and hopefully take a little bit of that everyday work off your plate. You're wearing a lot of hats as an originator, and hopefully these marketing tools are going to make it a little bit easier for you in that marketing piece. So John, maybe we can just quickly start with the, social media. That's a big part of what everyone is doing. And, most of the time you want to be marketing on social media on probably a daily basis. So the cool thing here is that these images have been preset, for the advertising medium that you're using. So if it's Instagram or Pinterest, you're going to use that image. If it's Facebook or LinkedIn, you're going to use that. And our marketing department has even created the verbiage for you. So if you're targeting your realtors, your referral base, there's just copy and paste that. And it's going to be available for all of our programs. So, as John's kind of scrolling down there, you're going to see we have it for bank statements. We have it for an asset qualifier. We're going to have it for, Texas cash outs, which are going to be big this year, and, our ICF program. So this is just one of the ways that we invest in our relationships with you. And, we really are, Angel Oak is looking to build relationships, not just transactions. And I think this is one of the ways that we hopefully are showing you that we want to invest in those relationships. We do have a realtor presentation on here. Sometimes there's quite a bit of information. It can take a minute to load. So while John is kind of pulling that up, your local account executives are happy to. In fact, it's one of my favorite things to do is to go along with my originators and present to their referral sources. So, honestly, 1 out of 5 are going to take us up on it, and I hope that number increases. I do these all the time. I'll go along, another one of our bad jokes, but we are in the witness protection program. We don't mention Angel Oak. This is just, I'm one of your investors, and I'm here to talk about the programs that are available through you as an originator. And, our marketing department, again, has made it even easier for you and created this, you can edit this presentation, drag and drop your logo, your contact information, but it's going to give you something that allows you, just kind of a piece to read through and educate your referral sources on what is available. And before everyone kind of logged on, I was mentioning, for a lot of people, public speaking is like their number one fear. So if you're not comfortable with that, take advantage, bring your account executive along with you, and let them help you to educate your referral sources and show them that you are an expert, not just in what everyone else is doing, those very vanilla loans, which are great as well, but that you are able to find more homes for more borrowers' loans. And then maybe quickly, John, the flyers, because I know we're coming up on time, but my originators seem to love these the most. Armando, right? Don't we get like a lot of requests for these personalized flyers?
I find myself personalizing these for my loan officers all the time.
Yep. So again,
you just made a bunch of AEs really angry because.
Oh, sorry. Did I say that? I was thinking it, but I didn't realize I said it. Sorry, guys.
Yeah, so I think that's taking a minute, to load, but these are personalized flyers based on programs, and they can even be targeted towards your referral source if you're targeting realtors, if you're targeting, buyers, borrowers directly, if you're trying to establish a relationship. Armando had mentioned earlier CPAs and financial planners. Great source for a bank statement loan. That's the first place they go when they're like, hey, Mr. CPA did an awesome job with all my tax write-offs, but now I can't buy a home. What are my options? And they usually don't want to go back and refile their taxes to pay, more taxes. So, that's a great referral source to go to.
Yeah, Christy, I've got a question in here, and we're going to get ready to wrap this up. But what if my AE lives in a different city? What has everyone been doing for the last 2 years? They've been using Zoom.
Yeah.
What are we doing here today? We're presenting a webinar. So if your account executive is in a different city, why not, bring them in via Zoom? It's really, and Christy, just, we did a lot of presentations this week. We were in Florida doing a bunch of trade shows. This is without a doubt the most powerful presentation you can do on behalf of your referral source. Whether we like it or not, your referral source are pre-screening your borrowers. Mm-hmm. And if we can educate them and inform them on all these programs that are out there, that just increases your sphere of influence, right? So we can do that on your behalf. And I will tell you, if you get 10 I mean, I didn't throw this stat out there, but if you can get 10 realtors in a room, I promise you will get one of their loans. Armando and I did a Zoom call probably right after COVID, and I think you got 2 ICFs from a realtor in that room, debt service coverage program.
Yeah.
So this is a really, really, really powerful presentation that will help you grow your business. And I'm going to see if I can get my camera out here as we come to the end here. But this is there's a statistic we have that of the percentage of loans we close that are bank statements, almost 10% are realtor borrowers. So think about that. And 17% is business services. I think 14% is construction. Renovation. Everyone's trying to get renovation. So think of, as you market yourself, think about marketing yourself to realtors, professional business services, construction. So a lot of that roofing. My God, you work with your account executive. Your account executive really knows how to help you grow your business. So I know we're a little over the hour here. Again, this is being recorded. I apologize, or maybe it's for your benefit that I was off camera for half of this, but I apologize for a little bit of the technical difficulties we had. Armando, wrap us up here, however you want to close something, then I'll go to Christy, and then I'll close us out here.
Thank you, John. One of the things that I wanted to just throw out there in regards to the marketing flyers is the CPA flyers. That is a referral source that not a lot of people are going after. And, do a Google search for tax preparers and your zip code, fill out the flyer and drop it off. You're going to get loans from them. So that's my piece.
Yeah, Armando.
CPA, Texas Home Equity.
30 days, right? What are they doing? You're going.
All right, taxes.
I'm going to say everyone on this call probably has a CPA almost, or at least 75%. You're going to go to your CPA. Why not bring a flyer with you and talk to your CPA about that? They do a great job for you on your taxes. Why not? They're doing a great job for everyone else they do their taxes for. So why not get that, that CPA on board? I promise you it will work. Christy?
Yeah, I think, first of all, thank you all so much for coming on. I was super excited when I saw that we had over 400. We love what we do, and I think we're super proud of our products. The one thing I do want to say is that, projections are non-QM is going to double in 2022, and we're talking about a $40 billion industry. And, Angel Oak is number one in that space. We've done more loans, we've been around the longest, but I think the question is, what percentage of that 40 billion is going to be for you? Take advantage of these opportunities to become educated on these products and know that you're not going to be alone. That we're going to walk you through it. This is a great opportunity to keep your income where you've been used to it being over the last couple of years.
Yeah, great job, Christy, and very well said. And we want to thank everyone. Thank Armando, Christy, taking time out of your day. I'm lucky enough to work with you guys on a daily basis. We have an AE, Annie Jensen, really kind of how she closes out is, why not say yes to someone who's been told no for a loan for so long, right? Just, you are taking a borrower that has been told no, they're going to find it. Why not let it be you and let you increase your referral source? Someone's been told no so many times, you're going to put them in a house and you're going to create wealth for them. So why turn that bank statement borrower away? Why turn that debt service coverage borrower away? Why turn that foreign national, that full doc that can't meet conventional? Why turn that ITIN borrower away or that asset qualifier? Don't say no. Get that deal closed. Let them live the dream of home ownership. So without anything else, thank you again. Apologize for the technical difficulties. Everyone have a great day. We really look forward to working for you. If you have closed a loan with us, thank you for your business.